So is there a lot more room to cut if, in fact, you were to look to trim back spending as well? And I really want to get at where are the opportunities right now? What do you bet on in terms of projects in the next 5-10 years?
Well, we have a high degree of flexibility with our North American programs. With our unconventional portfolio, we have a huge number of opportunities in the three major plays that we are involved in: the Bakken up in North Dakota, the Permian Basin there in Texas, and the Ardmore-Woodford in Oklahoma, all of which are very high-quality plays. So we do have the ability to dial that activity to the left or to the right, depending on how we see the attractiveness of the environment we're in. And that's something you could do on a fairly short basis. The larger scale projects that take multiple years to execute around the world, obviously those that are already underway, we're going to take to completion. We've completed our big oil sands investments up in Canada. They are now up and running and doing quite well. But we still see a lot of attractive opportunities in West Africa. We have additional investments in mind there. There are still opportunities in Canada that we're evaluating and considering. And so there's still a huge portfolio of things in front of us. And the task for us is constantly sorting through those, picking out those that we think are the most resilient to a highly uncertain price environment, which is nothing new. That's always been the case. But which of those is the most robust, the most resilient, and we have a high degree of confidence around our ability to execute them well and deliver them on the cost and startup basis that we intend.
So a lot of opportunities on the project side. Let me ask you about acquisitions and the M&A story for you, because here we are in an opportunity to see some of these shale players, in particular in the United States, come under pressure because of the price of oil. It doesn't make economic sense for them to continue some of these projects. That's why we've seen some of their shutdowns. Is there an opportunity for you to acquire a large U.S. shale player?
Well, there may be. There doesn't appear to be today. What we have been successful doing is picking up selected assets, as these companies that you're talking about are having cash flow challenges. In order to manage their cash flow needs, maintain their payrolls, keep their organizations intact, hold their assets, hold their leases, they are carving some things off to raise cash, and we've been very selectively picking up assets from them. Whole company acquisitions today, we look at everyone all the time, monitor how they're doing, but valuations today are still a little bit out of line with our view of where they should be in order to make an acquisition attractive to us. We'll see going forward. There's going to be a lot of pressure coming on a lot of companies as we enter next year. I think, as everyone widely understands, with the exception of a couple of those players, most people's hedging programs are rolling off because the forward curve has been flat for so long. Hedging has not been available to people. That's been a source of stabilizing their cash flow now for the past couple of years. That's not going to be available to them. That may bring some additional pressure, and that may narrow this gap between us. So we're always open to talking to folks.
It sounds like you're waiting for it.
We're going to
waiting
keep
for it to come to you, because
yeah.
prices will probably come down further.
There's nothing we have to have.
Right.
We have a very attractive and a very large portfolio in this space here in the U.S., which we've built up over the last 5 years. But obviously, if we see an attractive resource, we're in the resource business, we know it's going to be needed for the next 30, 40 years. We're happy to add that to our portfolio and to the benefit of our shareholders over the long term.
What is your sense of the shale revolution? I mean, for a long time, we were looking at shale players in the United States as really the growth story for the U.S. That's where the jobs would be. That's where the opportunity would be. And then when prices fell, people were worried that this is going to be where the job losses are.
Well, and I think that's exactly what we're seeing. If you look at job growth in the U.S. since about 2010, and 2009, when the Shale Revolution really began and the activity levels picked up to these very high levels, most of the job growth in the United States, if you strip out our industry, oil and gas, E&P jobs, direct jobs, as well as collateral jobs that support that activity level, there was no job growth in the U.S.
Right.
It was all attributable to this energy revolution that has occurred. So as we've had the downturn, we are seeing significant job losses there, and I think that's why you're seeing it translate also into a flattening in some of the job gains.
So does the job story in the U.S. get worse then?
It could get worse.
If it's so tied to the Shale Revolution.
It could get worse, as I indicated, because as companies move into next year, depending on their cash available, they will have to adjust their activities further in order to manage the cash that's available to them.